We're back at it again here with another video with Invest for Tomorrow. We're going to jump straight right into it. If you want to smash the like button and appreciate the effort I put into this video, go ahead. But I want you guys to be aware that if you have money in the stock market and you care about it, you're going to love what I have to share with you guys. You're definitely going to want to stick around for all the information that the charts are showing based off of Ultimate 42 Vision, 42 Vision itself, which is something you can gain access to, and also what the headlines and articles are stating and what catalysts to look for. And you're going to want to jot these dates down to be aware of what's going on in the markets, bigger picture, and even narrowed in the next few days. But before we do, I want to share with you guys the home run opportunities I mentioned this morning over at the Discord. And if that's something that interests you and you want to get on early with us, check out the link down below in the description to the Discord. We look forward to having you join us. And we're going to jump right into it here with everything I have to share about the S&P 500 index and the overall markets. The home runs of the day were spectacular and beyond expectations, and while the S&P 500 index continues to struggle in the red and portfolio sits sideways, I will continue to strive to look for opportunities every single day. And if you want to get on early with us, check out the link down below in the description to the Discord, and by joining you'll become part of a growing community of investors all looking to learn and grow together through the volatility of the markets, and you can become part of this as well. So these are the stocks I mentioned this morning: KTTA, APVO, and this is how they performed in a matter of minutes and also throughout the day. So KTTA, since I mentioned it in the fours as it was dipping in the pre-market, it started to build strength towards the bell, and after the bell it went up nearly 100%, and after that point it pulled back and jumped up again to a highest point, hitting 90% plus, between 90% to 100%. But from when I mentioned it towards the bell, it went up nearly 30% in a matter of minutes. Now APVO gave multiple opportunities of 10 to 20%, 20 to 30% within minutes after the bell and that consolidation and sideways action. And here you have it with Ultimate 42 Vision showing that bull indicator and strength towards 42 Vision, giving a highest point of 250% plus, guys. If you want to get on early with us every single morning and become part of a growing community of investors all looking to learn and grow together, check out the link down below in the description to the Discord. We look forward to having you join us. Let's jump into these charts. So here we are with the S&P 500 index dipping really quickly and trying to reverse. But when we zoom out, we are near all-time highs with the S&P 500 index. Now, I want you guys to understand why it fell here and why it also dipped here from the 16th to the 18th. And both of these times, it was because of the uncertainty of either Jerome Powell getting renominated as Fed chairman or getting replaced by someone else. Okay, there was two picks, and the most likely was Brainard, which turns out she's actually going to be a vice chair of the board of governors. So Brainard and Jerome Powell are both focusing in together to tackle inflation and keeping things steady with the Fed policies. So not changing it up much, but adding Brainard closer to Jerome Powell and keeping him has been a big reflection in the stock market of some type of, I guess, excitement and thrill, because it started to fall and it just ran up to a high here of 4,744, and now it's dipped. Okay, so it hit a new all-time high after that news was confirmed. So why was that so significant? Well, it was going to change things up for the eyes of the market. Well, we got that out of the way. So why is the S&P 500 index struggling to stay above 4,700? Well, there's a few reasons why, but the main reason is this upcoming week, and also through this upcoming week, the uncertainty of the next following weeks. This is why you need to write these dates down. I want you to write them down. Don't forget them. They're super important for the days to come, and it's so important moving forward after those dates how these reactions are handled. Okay, so one of them is actually something that was postponed, which we're going to break down, and the second is coming up this week, and that is right here with Black Friday, okay? How it influences the markets and the overall economy, okay? Retail spending and consumer spending, everyone's watching that. That's super important. The economy overall and stocks in the stock market. Well, the influence of Black Friday on the stock markets and individual stocks is also less than straightforward. Perhaps predictably, a range of retail stocks can be expected to rise if, keyword, if sales expectations are met, okay? So if we read through all of this, it's just going to explain to us how this is straightforward, but there's a key word here, okay? If sales expectations are met. If they're not met, it's going to affect and price in even further within the charts, okay? The S&P 500 index and overall stocks. A lot of stocks are already pricing in more than just their most recent news, but also what they expect is going to happen going into this week. Now, these stocks are some of the largest stocks overall in the stock market that affect the S&P 500 index and many other sectors altogether. And it talks about how it's done in the last several times and the percentage increases and decreases when this has happened. I mean, this is old pricing for Apple. I mean, Apple's almost at these levels, but this is pre-split numbers. So you can only imagine where it's at now. It's almost at $500 to $700 per share, according to pre-split levels. But anyways, this is just showing you retail numbers and stuff, but the broader markets are going to be looking at this. This Black Friday sale deals and weekend and consumer spending is going to be a key indicator for analysis for the stock market, for hedge funds, for institutional investors, large investors, the whales, to make a decision and say, okay, the economy looks strong or is it looking weak? Now, I want you guys to see something here on the charts with Ultimate 42 Vision, which is the upgrade that's coming soon to 42 Vision, and you can join us. You can gain access to the home run opportunities I watch every single day, the daily watch list, weekly watch list, and a community of investors all looking to learn and grow together, and then the clarity in the charts of where opportunities are being maximized by every single member that is using it and loving it. Now, there's two things going on here. Ultimate 42 Vision on the 30 minutes, since way up here at 4,727, sent a bear indicator, but every single time this pops up in 42 Vision, right here in the bars, in the charts, there tends to be a reversal every single time. The last time it popped up was way down here with a bull indicator, okay? So this time around, it's a little different, and it has me a little concerned if we don't see a bull indicator. Why? Because shortly after, when it starts reversing, a bull indicator pops up. Shortly after, a bull indicator popped up. And shortly after, we don't see a bull indicator popping up yet. So are we still under the bear indicator, and this is creating a bull trap to the downside of further pressure to the downside of a correction or crash? Now, I don't see any crashes coming anytime soon unless there are major catalysts that turn out to be super negative or compound with each other. But a correction, if it's going to go into weakness and consumer spending does not meet expectations of what Wall Street thinks Black Friday is going to bring, and these companies don't see a huge improvement in numbers, especially with all the shortages that there is out there, no matter how much they sell, it might not even meet expectations. So don't be surprised, or I could be wrong, but that's what it's showing on the 30 minute. Now, when I put the 4 hour, okay, it has been under a bull indicator since way down here at 4,326, pure strength all the way up here. And we have seen for the first time consecutively a shift of full weakness, okay? This went into a shift of weakness and reversed pretty fast. On the 4 hour, a shift of weakness, and it's been going downwards. And we have two red candles back to back and a lot of volume selling, okay? Almost matching up with the green. So super important to be tracking this and watching this. Now, if consumer spending is better than expected, well, this right here on the 30-minute time frame and 4 hour as well is starting to push up together, and this is probably going to continue that route and reverse and hopefully get a bull indicator eventually through that reversal to push up higher to newer highs, new resistance levels, and probably break out to newer highs that we have not seen before. That's the positive bullish opportunity and possibility. But based off the 4 hour, we still have not gotten a bear indicator, but it is going into weakness. And on the 1 day, we are seeing here a big shift, okay? The last time that it actually sent a bull indicator was down here, again at 4,300 and some change. It's been in pure strength all the way. And we've had 2 small corrections happen along the way. Okay, we had this one up here, from way up here at 4,700 to 4,600, very minimal. And then it started to do another leg up, and now it's going into further weakness. And now there's uncertainty of how this is going to all play out with consumer spending. And then most of all is what's about to happen in December. And these are the dates you need to have written down, because this was postponed, and this is what created some of the fear and uncertainty and doubt back in October, back in November. Okay, I need you guys to understand this at the beginning of November and back in October overall. And we went all the way back to PROG. I want you guys to see this chart. Excuse me for that. But that's what created that big pullback in the past right here. Okay, September into October, going into November. That's where this all happened. And that uncertainty had to do with obviously a lot of rebalancing, uncertainty of a lot of different things, the Evergrande scandal, and then the debt ceiling. This right here is super important. US could reach debt limit by December 15th. This other headline here, a fight in Washington over the debt ceiling looms, which could create market volatility. Now, I don't use this to be fearful. I don't use this to create FUD. I'm just actually trying to be aware and prepared. And according to how things work out, I have 42 vision. You can actually gain access to 42 vision to maximize on opportunities to catch the dips, maximize on put options or call options accordingly to what is being seen in the charts. And every single member can make their own rational decisions. The whole goal with 42 vision is to empower every single investor throughout their investing journey and charting experience. So this debt ceiling here has been extended a few more days, okay? Yellen estimates that the government will run out of money on December 15th, which is an extension from the previous deadline of December 3rd. She sent out a letter outlining her thoughts on the matter to the House Speaker Nancy Pelosi on Tuesday, where Yellen wrote in part that the Treasury Department might not have enough resources to continue financing government operations past the middle of December. They need to go ahead and make this debt ceiling come to an agreement. They keep on kicking the can away and away, longer ahead, and that's going to create volatility, uncertainty, and doubt in the next few weeks. So if for any chance, okay, Black Friday turns out to be phenomenal, we're going to see stocks probably rally, have jumps of 5 to 10%, 10 to 20%, or just jump up overall in the markets. That's going to be very short-lived if we get hit across with this big wall here that has not been situated. Okay, it's just been a can kicked down the road, and that is not helping the economy or the markets at all with having clarity of where it wants to go and where money's going to flow. So I need you guys to understand, on the 30-minute, we're under a bear indicator. On the 1 hour, we're still under a bear indicator, even though it's trying to come back up. On the 2 hours, we are not seeing that much strength, but we're still under that bear indicator. And on the 4 hour, we are in that weakness. We're not under a bear indicator yet, but when it does pop up, it could be a significant indication of a possible decline. And what I'm going to be looking at is 4,630 all the way down here at 4,551 and all the way down here at 4,329 if we go into correction mode. I don't think it's going to get that ugly, but it's all possible, right? We don't know what to expect until all of this is cleared up, to the point that we've had small moments of uncertainty just because of a renomination of a Fed chairman, and if he was going to be replaced or continue to serve as the chairman himself. So I hope this video brings some clarity of some of the things to expect, be prepared for, be aware of, and if you want to receive clarity in the charts like no other, and you want to get your spot before this upgrade comes up, the bull and bear indicators for Ultimate 42 Vision, but use the 42 Vision indicators, the 2 premium ones that are out already, check out the link down below. You gain access to the weekly watch list, daily watch list, everything that I'm watching every single day, and also become part of a community of investors all looking to learn and grow together through the volatility of the market. And with this information and this clarity in the charts and these tools, you will be empowered to make your own rational decisions to maximize no matter where the markets go. As always, guys, thank you guys so much for watching, and let's make some money.